Hello, hello. How are you doing, traders? I hope you had a very profitable trading week. This is Scott N of V Traders, and I'm going to go over a couple of trades from Thursday, July 2nd, 2020, and talk about the subject of trend lines. As someone asked questions about trend lines, and I thought it would be a good topic for a video. I'll talk about the concept of trend lines, and after that I'll go through 3 trades I did on July 2nd where I actually used trend lines to assist in my trading. For those that may not know, a trend line is simply a diagonal line that is angled up or down, drawn by connecting price pivot points on a stock chart. You must have a minimum of 2 existing pivot points, but the more the better. But on the higher time frames, don't discount the value of only 2 pivot points if they are distinguished and well spaced. Here's an example of what I mean. This is a chart of Tesla on a weekly chart. You have 2 very distinguished pivots, one in November 2013 and the other in February 2016. June of 2019, not only did price meet that trend line around $180, it finished the week with a strong reversal away from that. Now, about a year later, Tesla is about $1,200 per share. Now, I have heard from some traders that trend lines don't work, which is ridiculous. Trend lines have been a cornerstone of technical analysis for decades, if not centuries. They absolutely do work. I think the confusion comes in how to draw them, how to use them, and how reliable they may or may not be. If they are not your thing, that's fine. You don't need to trade with them. You can trade without them. But for me, I think it's another trading tool that I like to keep along with other tools in my tool chest. This is not the Holy Grail, but I don't believe any one thing is the Holy Grail. More than half of the time I am trading a particular stock, there is no trend line at all. But when they are there, I pay attention. One thing I will say about trend lines is they are more reliable over longer time frames. You may see a trend line develop on a 1-minute chart over the course of one trading day, but I would venture to say that a trend line that is developed over on a 15-minute chart over the span of, say, 3 days is not only going to be more reliable, but an entry using the 15-minute trend line is going to offer a better risk reward than using the 1-minute trend line, potentially. There are 2 ways I use trend lines, either to enter in the same direction of the trend line or enter on the break of the trend line and trading in the opposite direction of the trend line. But a trend line can be either angled up or down. So there's a total of 4 scenarios for trade entries. There might be more, but there's 4 basic scenarios. The most common frustration I hear from other traders about working with trend lines is that they will draw a trend line and will enter near the trend line intending to trade in the direction of the line, and it promptly starts breaking the line and they ultimately get stopped out. Or they enter the break of the trend line in the opposite direction of the line, and then price proceeds to come right back, cross back over the trend line and continue to trend on its merry way as if the break didn't happen. My answer to both of those problems is that trend lines work best in conjunction with something else. They don't work well in a bubble. I wouldn't suggest using them in a bubble, but I think that it is true of any trading tool you use. Some examples might be the trend line breaks, and right when it breaks, price is crossing under VWAP, or an important moving average that you use. or you want to go long near an upward sloping trend line, and right at that same price point it lines up with an important horizontal price support. The best scenarios will have confluence of several things all lining up together, giving you an even higher probability that you have a great entry. Another way to check yourself on this, ask yourself the question: if the trend line wasn't there, would you still want to go long or short at that time and price? And if so, what's the reason? So now I'll get into my trade recap of the 3 tickers I traded on Thursday with an assist from trendline recognition. Those tickers are Broadway Financial, BYFC, GNUS Brands, GNUS, and Martin Midstream, MMLP. So here is a 2-minute chart of BYFC, and I notice what looked like a trend line forming from 10:30 through 11 a.m. and I used it for the basis of taking a starter position and then leaving a full-size order right at the trend line. So I'd get filled right at that trend line, and that also happened to be right at VWAP. It also happened to be slightly above an important horizontal price support level that I had drawn. And you'll notice that not long after I entered that second trade, it broke the trend line. So this might be an example of something that some traders would be frustrated by. However, I wasn't willing to stop out right away, even though that happened, because for me to exit this trade and be invalidated, first of all, I did have a larger picture idea in mind, which I'll show you in a minute. But also, I would not exit unless it broke VWAP and probably broke that support line, horizontal support line I drew, and stayed there. And that's probably where I would stop out. Or I would say definitely is probably where I would stop out. So here is a good example of what I mean by confluence of factors that brought me to make this trade and kept me in the trade, even when it would appear that maybe I was wrong about the trade, just judging only by the 2-minute chart. This is a higher time frame, 15-minute chart showing over 2 weeks of time. To me, I can clearly see a saucer-shaped pattern, which is a pattern I trade, and it's a bullish pattern. Additionally, I recognized another trend line on this 15-minute chart that started on Wednesday and seems clearly defined to me. Also, BYFC was in a sector that had been in play, and other stocks in that group were all behaving strongly. In addition, it appeared as though that it was very likely that previous resistance area of 335 would be tested again. Putting all these factors together, that's my assumption. So given all these factors, I'm going to give the stock room on the smaller time frame so that my idea on the larger time frame can play out. Now going back to the 2-minute chart, this is how the trade played out the rest of the day. So you can see my first entry, my second entry, and I drew that trend line. It wasn't until later that a much more important time frame developed over the rest of the course of the day. And you'll notice here that it even violated that trend line somewhat and then came back within the trend line. That happened at the end of the day, which does sometimes happen because of how chaotic the order flow is, just like right after the bell in the morning. But as my confidence in the trade grew, I did add to this trade, and moved up my risk point. At that point, I was very confident in the horizontal support line I drew and VWAP. But it enabled me to ride this out. I held it until after hours, and I actually am still holding this. I decided to swing the rest of the position over the weekend because I was up so much on it, and I thought there's a high probability that on Monday that you might get a spike through that resistance area. So I decided to hold some over the weekend. So here's just my actual trades so you can see them better. But started out with a FOMO starter. It's small size there. Then you can see I sized in right near VWAP. I got full size there. At that point, I think I was risking to 240, I want to say, or maybe 250. I'm not sure. But then you see I added to the winner. At this point, I believe that a trend was developing, and I moved up my risk in order to size in even larger. And I held this. I held this because of the trend and the larger picture I had in mind. And I was targeting 3.25 going into the close. I missed my chance there when it spiked up, but then I tried to get 3.25 and then finally took out some of my position. I think at about 5 o'clock or so, and then, like I said, I'm holding the rest of this. Next up, we have GNUS. This was a late in the day afternoon trade. The stock was very active all day and in play. Well, actually became more active late in the day. I drew a trend line and noticed that an important horizontal support line was nearing the trend line I just drew. This is usually a high probability setup for me, and I like these because you can pinpoint a specific entry point to enter, very specific. And the nice thing is, if you are wrong, you should know very quickly, and you can limit your loss to a small amount. So I picked a price and left an order there just hoping I would get hit, which I did. Since this was an end of the day trade, I just was interested in nailing and bailing, making over 20 cents a share while only risking 5 to 10 cents max. Last up, we have MMLP, which was a short, unlike the first two. Here we have an uptrend line that was formed the day prior and continued into the pre-market. I was late entering this one, but I was okay with that because I felt it was a very high probability trade. Here, price broke through the trend line, came back up and tested it, and then started rolling over again. I felt this was a very high probability trade, not only because of this chart, but I was thinking about the hourly chart shown here, which spans a time frame of 5 weeks. I don't know about you, but to me, the resistance area at around $2.35 is very, very clear. So this gave me the confidence to take the trade. Again, confluence. The more supporting evidence you have to support your trade idea, the better. That wraps it up for me. I hope you got some value out of this. If you have any comments or questions at all, just write them below in the comments section, and I promise I will get back to you. Thanks for watching.